From the studios of Farm Journal Broadcast, this is AgDay.
An iconic barn with an equally iconic name. Get a fresh coat of paint, meet the couple making it happen. More than a storm.
We are at basically zero sea level. We're going to have some real issues.
The ongoing problems and what remains of Hurricane Debbie as it travels up the East Coast, and the big market drop.
Very much the fear is about demand. And
the impact Wall Street's pressures are having on commodities right now on AgDay.
AgDay is brought to you by Pioneer.
Ben's bins, please hold.
Yeah, Ben's has been busy all day.
Seems like no one can keep up with this new Z series. What did you all put in these seeds?
Science.
Good morning, I'm Clinton Griffiths. The stock market continuing to sell off on Monday. It came as fears about a slowing U.S. economy increased. World markets also lower, with Japanese stocks suffering their worst drop since 1987. Now, it comes after Friday's report showing U.S. employers slowed hiring last month, leading to analysts concerned about the U.S. economy being weaker than expected, and that the Federal Reserve has tried to slow that economy too much for too long with higher interest rates in an effort to tame inflation. AgDay's Michelle Rook joins us. And Michelle, the commodity markets, specifically cattle, were hit hard again on Monday.
Right, Clinton. Risk aversion built in both cattle and hog markets on Monday with the global stock market sell-off. Concurrently, Goldman Sachs economists raised the chances of U.S. recession in the next year from 15 to 25%. Now, while the overall economy remains stable with no major financial imbalances, the markets were pricing in a 60% chance of an emergency rate cut by the Federal Reserve in the next week. We talked to market analysts about the reaction in the livestock sector. The meltdown in the global and U.S. financial market reflects heightened investor anxiety and volatility tied to the weak macroeconomics. The agricultural markets also got caught up in the panic or risk-off selling, in particular the protein sector. Fund-long liquidation tied to recessionary fear started last Friday in the live and feeder cattle futures and continued Monday.
hopefully we can do something to distract the market away from that. But very much the fear is about demand, and if you like being bearish, that's the one you can always pull out of your hat and act like you know what demand's going to do, which is impossible to do, by the way.
The hog market also fell in sympathy with cattle and on concerns about global sales.
Exports are critical for pork. They are for all our commodities, but when 1 in every 4 hogs is going to export, it's obviously a huge thing there. So, global economies for everyone else is probably, brings the hogs into the front row of that type of a thing.
However, Koima hopes after the dust settles, at least the cattle market can go back to trading its own fundamentals, and the tight supplies will support the cash and futures.
I don't think that we're carrying any cattle here in the north. In fact, I think the show lists are, from a year-on-year standpoint, they're much smaller than what normal is. And I know while the weights stay high, I don't see this uncurrentness deal, where you go down the road and see these 1,700 pound cattle. I just think the performance on these cattle has been good.
However, if the Federal Reserve would take emergency action to cut rates ahead of September, that could cause further panic in the outside and ag markets, as it would be a signal the Fed was worried about a hard landing for the economy. I'm Michelle Rook reporting for AgDay.
All right, thanks, Michelle. And while corn and soybeans were up slightly on Monday, longer term prices continue to look less optimistic for farmers. Ag economists at the University of Illinois say that current levels for future contracts suggest that for budgeting purposes, prices for 2024 crops should be $4 a bushel for corn and $10.50 per bushel for soybeans, and that those prices would result in low returns this year, far lower than from 2014 to 2019. However, they say those budget forecasts could change due to unforeseen events, but they also say it seems prudent to plan for much lower prices. Happening right now, what remains of Hurricane Debbie is potentially bringing catastrophic flooding as it continues to trek up the East Coast. And as Laura Aguirre reports, it comes after Debbie slammed into Florida Monday morning as a Category 1 hurricane.
Debbie roared ashore the Big Bend Gulf Coast in the pre-dawn hours Monday as a Cat 1 hurricane. It weakened midday to a tropical storm, but while the winds may be slowing, meteorologists say it could be one of the most prolific rainmakers in the region's history, having dumped a month's worth of accumulation on Florida already.
We're seeing a bit of a repeat of Hurricane Idalia.
Category 3 Hurricane Idalia slammed into the same area of northern Florida 1 year ago.
Many of the homes are just finishing up their renovations.
Businesses, too, like this resort, newly rebuilt after being destroyed by Idalia, are now flooded again by Debbie's storm surge. The Coast Guard busy offshore, rescuing 2 people trapped on this disabled sailboat off Boca Grande, Florida, Sunday. Forecasters say Tropical Storm Debbie is now churning along at walking speed, expected to drop historic amounts of rain on Georgia and South Carolina in the coming days.
We are at basically zero sea level. We're going to have some real issues.
South Carolina, Georgia, and parts of Florida are all under a state of emergency. Residents are being warned to stay inside and avoid floodwaters as crews mobilize to clean up debris and restore power in Debbie's wake.
That is the number one way where we will see fatalities, is by people being out on the roads.
I'm optimistic that we're prepared, but again, you never know what's coming down the pike.
I'm Laura Aguirre reporting for AgDay.
While Hurricane Debbie could bring historic rainfall across the southeast, northern tier states could also be in for some rain. Meteorologist Matt Engelbrecht has an update for us.
Yeah, we look at the overall map. You got rain chances, obviously, back where Debbie is located, but the rain back up into the Midwest is contributing to this system staying where it is. This tropical system, the one thing that we've talked about before historically is whether or not a tropical system can pick up the trough, meaning you're going to get a weak trough digging down. This is going to slip underneath that trough or that U in the jet stream. And with that being the case, it's going to get trapped. Very similar to what we saw back over here towards parts of Texas and Houston a few years ago when they had some substantial flooding from a tropical system as well. So again, this is Wednesday at 6 a.m. This system is going to miss the trough as it is going to be rather shallow. That is going to increase the rain chances back through the Midwest while this stays down to the south. It is worth noting that the rain that is coming from this trough, this is Thursday at 9 p.m., and this weak cold front is not associated with this tropical system off on the East Coast that is set to bring feet of rainfall. And we're hearing better things about this year's wheat crop. Carl in South Dakota reporting some seriously good winter wheat. I'll have more on your forecast coming up.
A new effort to help Western producers protect water supplies during drought years, as USDA announcing it will invest $400 million in at least 18 irrigation districts, including California, Utah, New Mexico, Arizona, Oregon, and other western states. Now, the districts will get up to $15 million each. Producers who participate will receive payments for voluntarily reducing their water consumption while maintaining commodity production. USDA says the program is expected to help conserve up to 50,000 acre-feet of water use across 250,000 acres of irrigated land. How much could the House Ag Committee's Farm Bill raise the federal budget deficit? Well, the Congressional Budget Office has released its official estimates. It says the plan could increase the deficit by a net of $33 billion over the next decade. Now, in a report, it says the Farm Bill would cost $1.25 trillion from 2025 to 2033. The primary driver of the increase, the cost of several commodity program provisions, which are expected to rise significantly due to higher reference prices in the price loss coverage program. Now, one key part of the House plan would suspend part of USDA's use of its Commodity Credit Corporation spending authority. However, CBO estimates potential savings would be between $0 and $8 billion. On the trade front, the U.S. is rejecting Vietnam's bid to have market economy status. That classification could have boosted exports and cut tariffs on goods from the country and is becoming a supply chain alternative to China. Now, the Department of Commerce citing several reasons for maintaining Vietnam's classification as a non-market economy, saying that despite economic reforms, there is still extensive government involvement in Vietnam's economy, and this includes control over pricing, currency, and trade practices. Now, without the market economy status, goods from Vietnam are subject to higher anti-dumping duties, making them less competitive in the U.S. market. The wild start to the week impacted more than just cattle futures. We'll discuss it next in Markets Now. And later, we're off to New York, where work is underway to preserve a historic icon in the country.
Earn revenue through the Bear Carbon Program. Simple, flexible, certain. Learn more at bearforeground.com/carbon.
Tyson Foods releasing its expectations for third quarter revenue and profit, and the numbers beat Wall Street expectations. The company reporting net sales rose 1.6% to more than $13 billion in the quarter. However, it continues to expect revenue for the full year to be flat compared to last year when sales declined. Now, Tyson's beef segment saw volumes up 4.4%, driven mainly by higher average carcass weights. Prices for the segment also rose to 1.4%. as the company continues to deal with limited cattle supplies. Grain markets tried to shake off the drama on Wall Street, which cattle got caught up in. Michelle Rook is back with more on the impact in Markets Now.
Monday's market closes lower in the livestock. We managed to come back in the row crops. Risk management commodities. Chuck Shelby is joining us. And Chuck, let's talk about the sell-off in the livestock futures, kind of tied to the sell-off in the stock market and some long liquidation there, huh?
Yeah, it was a very volatile day. When you look at the reasons why, it's simply the losses in the equity markets came into play, and the funds needed to bank some profits in other markets, primarily in the livestock. They were long, so they sold out of those positions, and cattle and feeder cattle got hit really hard. So that we'll see what happens today if we can see these markets come back and stabilization occurs.
Yeah, technically, how much damage have we done now, especially like to that feeder cattle chart?
Certainly, you know, these kind of days with those drastic down moves damage the chart. But I think you have to go back and again and look at the reason why. And if we can see stability over in the stock market, you know, it seems to be overdone and everything. So I think we have to see and watch in the next few days how the stock market reacts. And if it can stabilize, I think we'll see the cattle markets come back around.
Are you concerned about recession and the impact that could have on protein demand or not?
I mean, inflation's finally caught up with a lot of American consumers. So certainly, you know, after summer, I do think going into the fall season, I'm concerned about this demand, and recession is a big factor in consumption of our meat products.
And row crops were able to reverse and close a little bit higher. How much of that was just kind of some short covering or maybe some position unwinding?
That's basically 100% because that early in the day we saw quart of beans down pretty dramatically, checking out some lows from last week, and then the fund money turned around, took off short positions to show some profit against their losses in the equity market. So pretty heavily dependent upon what the funds wanted to do. And it was nice to see the market rally. It was a good day, and hopefully we can continue on that.
Yeah, no doubt. Thanks for joining us, Chuck Shelby, Risk Management Commodities. We'll have more AgDay coming up. Watch Markets Now with Michelle Rook on the Farm Journal YouTube channel, keeping you updated throughout the day on the markets at the open, midday, and close. Find out what moved the markets today and what to expect the market to do next.
Got two very important features that we're following. One, of course, that tropical system with Debbie and the flooding potential from that. The other is what's going to happen when we get that tropical moisture moving out and what that's going to do with a trough that is going to be moving in. We talked a little bit about it earlier. I want to go dissect this a little bit more. 5 to 15 flooding potential on Tuesday back up here towards Montana, but also down here to the south. These two systems are obviously separate. As we go into Wednesday, Thursday, and Friday, that jet stream is going to cut down here to the south by Friday, and pick up some of that tropical moisture back up to the northeast. Until then, widely scattered showers, maybe a heavy downpour or two. The severe weather threat remains relatively low, but with a cool front or cold front dropping down from the north to the south, there is going to be some more widespread showers, not associated with the tropics, back in parts of the Midwest. Again, this is on Wednesday. You're all the way up there, 100% chance. Flooding potential back into North and South Carolina. Remember Hurricane Matthew? That's a big point with this kind of situation. Could see that repeating itself this week. We're all the way into Thursday, and that flooding potential is still located back towards North and South Carolina. So that trough's going to dig through on Thursday back here towards the west. You can see we're starting to spread the flooding potential back up here to the north. By Friday, you start combining the two, and that 15 to 40% flooding potential gets really big. With the trough cutting down Thursday, Friday, and into the weekend, that's going to spread that tropical system out rather than a strong Category 5 that is very focused around the center. It's going to become very broad. In that kind of situation, you're looking at not a wind threat, but a flooding potential for a large area of the East Coast, depending on exactly how these two intertwine between that trough and that tropical system. No surprise here, precipitation outlook between the 10th and the 14th. You got things staying dry as this is going to kind of get to the East Coast, and it's going to be out of here by the 10th through the 14th. A little bit wetter pattern back up to the north and to the northwest. And temperature outlook 12th through the 18th. The heat builds back in across the United States. We'll start off with Dayton, Minnesota. Mostly sunny, high around 76 degrees, low of 54 degrees. Dayton, Ohio, mostly sunny, high around 81 degrees. And no, I'm married. I'm not Dayton. Kansas, mostly sunny, high of 89 degrees.
An ag startup claims to have created a vaccine that can cut methane emissions in cattle. The company is called Archaea Bio. It says its mission is to develop a safe, cost-conscious vaccine that's also user-friendly. Now, the company has been testing a possible vaccine candidate for a year with help from researchers at Texas A&M University. That company says the vaccine works by producing antibodies in cow saliva that attack methane bacteria in their stomachs. Now, it reports initial trials showed a 13% reduction in emissions. The company recently raised $26 million in funding, including some money from a firm backed by Bill Gates. It plans to improve and distribute the vaccine widely within 5 years. We've seen a lot of growth in dairy across South Dakota, but what is making the state so attractive for the industry? DairyHerd.com looking into it. In June, USDA says the state recorded a combined production of 406 million pounds of milk. That marks an 8% increase compared to the same time last year. Now, a sales manager with Valley Queen pointing to three main factors helping contribute to the state's growth. He says especially along the I-29 region, it has to do with access to feed production, abundant groundwater, and dairy processing investments. The executive director of South Dakota Dairy Producers pointing to the rapid expansion in the state's dairy industry, saying that in the early 2000s, cow numbers in the state were fewer than 80,000 head. Now that number is more than 2.5 times that amount. You can read more about it over at dairyherd.com. Up next, an iconic barn gets a fresh coat of paint. We're off to New York for the story behind the Jell-O barn as work to save its famous facade is underway in the country. When is a barn more than a barn? When it turns into something iconic, and that's just what happened to this barn in Leroy, New York. The city is the birthplace of that familiar treat, Jell-O, and recently the 204-year-old barn was given a bit of paint, as John Kutchko shows us.
It is one of the finest barns, not just in western New York, but really, in my view, in all of America. The 1820 Jell-O barn here in Leroy got a fresh repainting over the weekend, and it looks absolutely spectacular.
John and Sue Demling have owned the Jello Barn in Genesee County for years. It was back in 2013 when they decided to paint old-style advertising on it. On one side was the nostalgic tobacco ad seen on thousands of barns across America beginning in the late 1800s. And on the other side was a celebration of Leroy's distinction as being the birthplace of America's favorite dessert. That would be Jello. They first painted it this way 11 years ago, and the other day repainted the lettering for the first time since then. They've actually done this kind of work on a few barns, recently painting a similar ad on a barn in nearby Stafford. As for the Jello Barn, it is wonderful in all seasons. A barn beautifully maintained for some 204 years. In Genesee County, I'm John Kutchko.
And our thanks to John Kutchko for sharing that story with us. And that's all the time we have this morning. We're sure glad you tuned in. From all of us here at AgDay, I'm Clinton Griffiths. Have a great day on Farm Country.